I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again, the chief market analyst at ITM Trading out in Phoenix, Arizona. I'm talking about Lynette Zang. Lynette Zang, thanks for joining us today on USAWatchdog.com.
It is always a pleasure to be here. Thank you, Greg.
In the pre-interview, we were talking about the tax deal. Looks like we have one, both the House and the Senate. Now they have to reconcile it. I think it's they didn't cut anything. I'm not happy about that. But it's a win for Donald Trump, and also it's kind of a twofer. They also have gotten the mandate where the IRS is going to be out of our health care. But I want to talk to you about what you're seeing. We have this tax plan coming. Everybody was talking about we need a tax plan, we need a tax plan. What's going on? What's your view on this brand new tax plan that looks like it's going to get signed, it's not going to get held up?
I would agree with that. I do think it's going to go through. My thoughts on it is that they need it to, and also adding in the repatriation of all the overseas money, they need it to continue to keep the market stimulated. I think that's really more than any other reason, a big reason why they're doing it.
Do you think that the market, a friend of mine, Greg Manarino, who's on often, he says that, this may be the kind of thing that not right, immediately, but, that you buy the rumor and then you sell the fact that we have this tax cut. Do you think this is going to actually propel the market higher, or does the market look like it's in nosebleed territory?
Well, both, actually. It's definitely a nosebleed territory. But I've been noticing over the past about a month, I've been seeing some pattern shifts that would indicate to me that the market is struggling and breaking down. And so by these tax cuts, it makes earnings per share look a lot better. It also brings back a lot of funds, which in 2004, when they repatriated, went primarily into stock buybacks and special dividends that boosted the market, didn't really stimulate the economy. And for what they're going to do now, the most likely outcome, and even what the CEOs are talking about, is that money will go into share buybacks, which they need to, because that is shifting.
So you think that this is not really going to help the actual economy,
no,
as much as it is going to help the bottom line for corporations?
Yes, absolutely. And, a big part of it is that we do know, and we'll give you all of these links, but we do know that corporate buybacks, stock buybacks, has been a big key in propelling the markets. Not entirely, because of course we've got all of the central bank injecting, but they've taken on a lot of debt to do it. But this corporate buyback is actually breaking down. I pulled this. This is a relative performance chart between PKW, which is a buyback ETF that tracks the NASDAQ. And we can see that it used to overlay. This goes back, let me see how many days, 2,558 days. So you can see the pattern shifting here, where it took more to buy it back. But I'm really key right on this little one that started in January.
It's going down.
Exactly. The markets are going up. The buybacks are going down. That's a problem for the markets, because it's the central banks that are trying to cut back on all their QE. That too has gone into propelling the markets. So they're running out of steam. So yeah, I think they're bringing it back to try and keep the markets boosted.
Yeah. Do you think it's going to work? Do you think that it's going to? Do you think this is going to be something that actually will send us into 28,000 land, or whatever in the Dow?
I think that it could for a minute or two, because remember, for me, and there's no doubt in my mind, I'm 100% certain that we're inside of a money standard shift. And so ultimately they need the markets to implode. But, look at the deficits. This is from the Federal Reserve. And, you can see how the deficits, let me see the date on that. This goes from 71 And you can see this is during the height of the crisis. These are all the fines that the banks were paying. Of course, you're not paying as many now. I mean, Trump is more corporate friendly, I could say, so they're not paying as many fines. So that means the deficit is going down again, and the new tax plan will add to it. So, how deep can those deficits go?
When you say money standard shift, they need it to implode. Will you explain the money standard shift and why they need it to implode?
Yes. The whole monetary system is based on debt, and we know that. And when debt, and debt are government bonds, notes, bills, be clear that anytime you hear any of those words, it's debt. And if you look at the dollar bill in your pocket, it says Federal Reserve note. So the whole system is based on debt. Well, when you have debt, you have interest on that debt. Interest rates are at zero bound. And in many cases, they are now negative, which is a historic anomaly. I mean, why would you pay somebody to loan them money? It's illogical. It doesn't make sense. So in 2008, the debt-based system broke. It died. It was done. And the central banks globally put it on life support, and they have to create a new system. And that's what, in my opinion, and I have really no doubt about this, they want us cashless, and they want everything in digital form. They want to dematerialize wealth, at least for the masses. So I'm 100% certain that this Bitcoin craze and all of this is about getting people used to digital currencies so that when they shift us from the debt-based system to the digital system, we're more comfortable with it and we're more familiar with it. And that's what all of the hoopla about the cryptocurrencies is about. So when I say that they need to implode, well, there are some of us that are not rushing to the arms of cryptocurrencies because though I know that's inevitable, I still want choice. I want a choice on how I can hold my wealth, not have all the title to everything on an ICO or on a crypto coin. So they've been setting up that system to make that transition because the debt-based system does not work. And we need to be scared enough to accept whatever the next piece is, which is the cryptocurrencies with a smart contract on the top. So that's what I mean by the implosion.
There's some people wanting to make it illegal. You hear, Stiglitz, the Nobel Prize winner, of course, he says you should make it illegal, and then they, these guys, same people say they don't understand it. It's Manarino was telling me that it's not debt like a dollar. It's you may not like it, but it's not a debt-based currency. I mean, you have your Bitcoin on a thumb drive, and you actually have it here. It's not somebody else's debt. Why are they talking about making it illegal? Is that just a big head fake?
Well, can I go back to what Greg said, and then I'll go to that one?
Sure.
Because while it's true, it's not debt. What it is a mathematical formula that is created using a ton of energy, but the energy is not stored, so it has no use. It is simply a tool of barter. And we've been trained over the years to think of that currency as money, and it's not money. It is a currency which can easily be debased, and inflation is the proof, of that piece. So I agree with Greg, it's not debt, but it's air, it's ether, it's, it's kind of like nothing. And it takes away the limitations of the central banks. Because the problem that they have right now, when they have an inflation target, right now they're talking about price targeting. But when they have an inflation target and they put a policy in place, it takes 18 months to go through the system before they know whether or not their policy was effective. When everything is digital, they can push a button and immediately have an impact on the bottom line for you and me, and then they'll know how effective is that policy. If they want us to spend and you look at your bank account and it says you have $1,000 and they push a button and now the interest or whatever they tax on it is $900, and then you see it go to $800. So there are no restrictions on how quickly they can attack that principal. And what are you likely to do when you see that? You're likely to spend it to try and hold value in anything. That's hyperinflation. So as far as the cryptocurrencies are concerned, I came across the 1996 NSA white paper on cryptocurrencies. And then a year later, there was a peer review paper on smart contracts. And then in 2009, at the depth of the crisis, well, there you go. Now we have Bitcoin. And then you see all of the banks and the central banks and the large corporations putting a lot of money into this blockchain technology. And then last spring, all of a sudden, you've got huge interest in Bitcoin as it explodes. So I think ultimately what's going to happen, the BIS, Bank for International Settlements, the IMF, all the central banks are really creating their own cryptocurrencies. That market must crash. And here's my guess. I can't guarantee, but I'm betting this is the case. When everybody is just devastated, the markets all implode, they'll bring out all the central bank cryptocurrencies, the US dollar coin.
Like Fed coin or dollar coin or whatever.
Exactly.
They're going to say, oh, we have a new one and it's going to be overseen by the government, and now you can trust this one. You couldn't trust that nasty old Bitcoin or Ethereum or Ripple or anything else, but you can trust this one. Is that what they're going to do?
Yes, that's what I believe they're going to do, and they're going to allow you to transition whatever you're holding in those other cryptos into the new one, or you're going to lose it. So what are you going to do? You're going to transition it.
But they don't want to make their blockchain technology illegal. They want to make Bitcoin and transfer it into their control, is what you're saying.
Now, Bitcoin may have a little different usage because it's Bitcoin. Remember, I did that whole piece on AC Chain, which is about digitizing physical assets, real estate, all of that. But if you buy AC Chain with Bitcoin or Ethereum, it turns into the IMF's SDR. Okay? I have not found, and nobody's brought to me or brought it up, any other cryptocurrency that becomes an SDR. So there could very well be a special role for Bitcoin and Ethereum. I don't know. But I know that at these nosebleed levels, there certainly can't be a currency with all of the volatility and all of that. It's not about that. It's about attracting attention. And yeah, the BIS did a report and they came out with a money flower, and they showed how they could even have some level of private cryptocurrencies inside of the control of the central banks in that money flower. Gold, and I'm sorry, I didn't pull that, but gold was the only form of money that they had, and they did have part of it in the flower, but they had a large chunk of it that was out of the flower, that was absolutely decentralized, and everything else has to run through the control of the central banks. They're not going to give up their power just like that. We've had a great run. Now it's your turn. Hey, population. Yes, we've taken 96% of your wealth, but hey, we're going to let you have this piece. It doesn't work like that. The system doesn't work like that.
Oh, then, I'm glad you brought up gold, because I know you guys do sell gold at ITM Trading. Where does this leave gold? Where does this leave silver? I mean, we just had another big, massive dump. Of course, they dump money intentionally. If you're dumping this kind of money, you're intentionally trying to drive the price down because you're intentionally trying to lose money. Nobody trades that way unless you're a central bank. Where does this leave gold and silver? A lot of people think it's like yesterday year, man. Some people are saying sell it all, we'll get into Bitcoin. Where does this leave gold and silver, physical gold and silver?
Well, keep in mind that for 6,000 years, gold has been money. And it is the primary currency metal because it is indestructible and it is full intrinsic value because it has uses right across the entire global economic spectrum. So, and it's real. It's the only thing that's fully outside of the system and actually fully invisible, but it's also the foundation of the monetary system. Cryptocurrencies have been around since 2009. Okay, so this hasn't even been tested on them yet. But what happens after you have a major implosion, all confidence is lost. What if we have a grid implosion? You won't have access to your Bitcoin, or if you have it on that thumb drive, what are you going to do? Take that to the grocery store and say, yeah, but I have Bitcoin on here. Okay, you're going to need that silver, the barterable silver. You're going to need physical gold because you can always convert real tangible money into any good, any service, or any other currency. The same cannot be true. So when all confidence is lost in the banks, in the central banks, in the markets, that's why they need a trustless system, which is a big part of this. Then you have your gold and you have your silver. And going back through all of these different crises from the Black Monday, which I was there in 87, I know what that looks like when you have a full market implosion, to the dot-com bubble, to long-term capital management, to sovereign debt crisis 1 and 2, and there will be more. Well, let's see. This is gold. And let's see what this one shows. Okay, the gold return is in gold and the stock market is in silver. And then the blue is the VIX. But which would you rather have? The intangible stocks or physical gold? So
in a crisis. In a crisis.
Absolutely.
In a crisis.
But although gold should be the foundation of, that's your savings account. Okay, silver is kind of like your checking account. But gold is your long-term, it holds your purchasing power, it holds your wealth, especially with what we're going through. Why are the central banks accumulating it? Why are the 1%ers accumulating it? Because this is what's going to protect you in a crisis, not digital currencies that need to be part of the crisis so they make the shift. But keep in mind, because I can't guarantee tomorrow, but this has happened over 4,800 times. So my bet is it's going to happen again, is that when all trust is lost, then gold becomes a component of whatever that new money system is. And the IMF has certainly talked about it. I mean, the original SDR, which is the internal currency of the IMF that was created in 69, originally it was based on gold. Then it's been based on fiat, and they've certainly discussed putting gold back in there as a component of the basket, and they'll need to do that to get the confidence back.
Do you think gold and silver are bottoming out right here? I mean, they're dumping all the stuff on there. It would have been down up. I know they dumped another $1.5 billion of phony paper gold, which I guess the CFTC is out, looking at porn like the SEC was doing during the Madoff years. And I guess they're just doing, they're just out playing golf and out just, they're not going to really make markets square. So where's the status with gold and silver? Is there no hope for it to go back up? What's going to drive gold and silver up?
I'll tell you what's going to drive it, and it's really simple, okay? The markets could certainly drive it like we've seen in Venezuela, but that's how they perform a reset, is they take something that has no tangible value and they revalue it against what is all intrinsic value, which is gold. So right now, gold, the true value of gold, if they did the reset today, is north of $9,500. That's a very conservative number. So when they do the reset, The more debt they grow, the more derivatives they grow, the higher that number goes. And we've been trained, we're blinded by numbers. We say, ooh, 11,000 fiat, except that the purchasing power is going down because what do central banks ask for constantly? More inflation. We need more inflation. Well, that means the dollar in this country is overvalued. So it doesn't matter. A trillion times zero is still zero. The markets can go to 50,000. They're all manipulated. There's no good price discovery. I don't care what you're looking at. There is no good price discovery. So it's just a tool to keep you in there so that when this next crisis occurs, that's where your wealth will stay. I mean, it really is that simple. Look at history. It has a tendency to repeat.
So let's futurecast here for 2018. Evidently, you're banking on a reset. And when you say reset, we're going to revalue the buying power of the dollar. We're going to revalue the buying power of Bitcoin. We're going to revalue what a barrel of oil is. We're going to revalue what an ounce of gold is, an ounce of silver. Explain the reset. What happens in the reset?
Well, in the reset, what happens is all confidence is lost. So you can look at Venezuela, you can look at Zimbabwe. We've been trained to think that the currency is money. It's not. It's just a tool of barter. And we have agreed to work for that tool of barter. But when the next crisis occurs, everybody's going to be scrambling. They're going to be freaking out. It's going to be way bigger and much worse than it was in 2008 because there's a lot more leverage and debt in the system. And when I say reset, because the whole system is based upon debt, that's actually what they have to reset, is that debt. So when they do that, the value of the currency goes to nothing, and they repay that debt with dollars in this country that have no value. That's what the reset looks like. And that's why they have to do it against real money, which is the gold. And that's what they've done every time. So
is that why they're thumping gold, to keep it as cheap of a price as possible leading up to the reset? What's the goal? Why do they keep thumping gold?
Okay, well, because a rising gold price is an indication of a failing currency. Do they want you going to gold that is outside of their control and outside of their view? No, they want you going to Bitcoin. So we've seen that, people that were in this space that were big advocates of gold and silver, physical, have sold their positions and they've moved into cryptocurrencies, which is not tested. You want to do it for a little bit of speculation, that's up to the individual. I'm not a speculator. That's not who I am. I'm a strategist. So I'm about building long-term wealth. But if they can make you go to Bitcoin, which is easier for them to control than gold, that's a good thing. Because now they can make that transition. You're volunteering it. You don't even know about it. In fact, I'm working on a book right now, and that's about the transition and how they do it, and the perception management is what the book is about. Because people need to understand this.
So gold won't always be. So in other words, gold will not always be down. At some point, they're going to drive it. They're going to drive it up. I mean, the powers that be are going to drive it up. They're going to want it to go up. Is that right, or am I wrong?
Even if the markets don't do it, you're 100% right, because that's how they reset the currency. That's how it's done. It's not like you have a menu and you go, well, I'll do it with A or B or C. No. For over 4,800 times, even right now, that's how it's done. So even if the markets don't do it, then the government, the central banks will do it because they have to get rid of the debt. They have to.
That's what the reset's all about. You're resetting the debt against everything else. Exactly. When is, and then everybody's sitting here when? That's what everybody wants to know. When are they going to do this? When is this going to happen? It's been going on. A lot of people thought it was going to be 2015, 14, 13, 12, 16, 17. I don't know. We're not out of 17 yet, but we're getting close. When is this going to happen?
Okay, that takes me into more of the pattern shifts, because that's what I'm seeing. It's not just those ones, but what really, so I'm going to say that it's, well, first of all, that's what the repatriation is about, to keep this going. But remember, it's only been roughly a month since I noticed the first piece of the pattern shift, and that has to do with the insiders. And this is a little complicated, but let me explain it to you. Every Wednesday, I take the information from the Wall Street Journal, and they track generally 10 sectors and what the insiders, so these are the CEOs, the CFOs, the boards of directors, the guys at the very top of the market, what they are doing for themselves, okay? Now, typically, you have all 10 sectors both buying stocks, because remember, stocks are a big part of corporate compensation. So they would get warrants for stocks below market, and then they would execute those warrants. So normal buying and selling occurs. But in September, now I would like to do a little disclaimer here, because I only started doing the insider trading, what, Eric, maybe 6 months ago, 7, 8 months?
I don't think
probably not even that. And when we contacted the Wall Street Journal to get the back data, they said they don't save the data. Okay, so we had to create this database ourselves. So therefore, it's not as deep as I personally typically like it. So I need to say that.
Okay.
However, having said that, in the end of September, what I noticed is that all sectors sold, but not all sectors bought. Now, this graph here, for every $1 worth of stock buying from the insiders, it reflects how much selling. So you can see there are two pieces that happened in here. Number one, you can see the selling increasing until we get here, and you can see that pattern shift, and it's much more volatile, okay? But here's where, since September 29th, while all sectors have sold, not all sectors have bought, and that's continued every single month. And up until that point, they were doing both. So that is a pattern shift. And in my personal experience, plus in all of my studies, who knows more about what's going on than insiders? While they were doing all of this selling and we saw the stock market keep going up, the corporations were buying back shares, and that covered what the insiders were doing. It hid it. So the problem is, now you have the corporations, because stocks are at huge nosebleed levels, that are slowing down their stock buybacks. I mean, they haven't stopped it, but as I showed you on this graph particularly, okay, they're slowing down their buying even as the markets are moving up. This is a pattern shift. This one started in January. This one I noticed in September. So this one started the end of September. So can you kind of see this breakdown that's occurring here?
So you think that we're topping right here and now? Bill Gross thinks we're topping here and now too.
The repatriation could change that, but that's why. And it's every aspect of the market. In the bond market, and I didn't pull a graph on that, but we've been hearing about the flattening yield curve, right? So we've got short-term rates that are moving up, and we have long-term rates that are staying steady. If that continues, I mean, the central bank, particularly here, is going to keep raising interest rates, right? Because they need to be able to lower them in the next crisis before we make that pattern shift. So we know the bond market is breaking down when shorter rates are higher than longer rates, which happened in China in May, by the way. Then that is typically an indication of a recession. So we've got a pattern shift breakdown occurring in the bond market, in insiders that are usually the first ones to get out, and in commercial real estate. Okay, so this is the commercial real estate, and I want to show you this because
So commercial real estate's going down. The bond market, the yield curve is flattening. The yield curve is flattening. Commercial real estate going down, and the stock market is topping out.
Exactly.
Is that so? So sum up the three things that you have right now. The three quick things that show you that we are at a top, and it's not just the stock market. What's going on?
Right. It's all of it. Okay. So the three quick things would be what's happened, the shift in insider sentiment, which is huge. That happens before every major market crash. Okay. The flattening yield curve and what's happening in the bond market with the lack of liquidity and the volatility in there. And then the real estate market where that's going down. But do you remember when the Fed talked about not reinvesting principal and dividends in the mortgage-backed securities,
Yep.
which they are doing that in the Treasury market. But this I pulled from the Federal Reserve on the mortgage-backed securities, and since July, it's 80% higher. Between July and I did this in November was the last time that they tracked it. So that doesn't look like it's going down. And I think that is about this, trying to keep the real estate market float. So I think this is a big indication as well. And remember, it's really not about these markets. It's about all the leverage in the banking system because their assets in general, Morgan Stanley in this country, the most dangerous one, if these markets, if their holdings, their assets fall 3.8%, they're insolvent.
Wow.
Deutsche Bank is Morgan Stanley, I think is, 3.8% for Morgan Stanley, 3.9% for Deutsche Bank. And they're all connected. And it's all of those derivatives that are based on the price action of all of this underlying fiat money products.
So let's futurecast here. 2018. What do you see happening in 2018? Evidently, we're not going to get the reset this year. We're going to get it in 2018.
We have to feel a lot of pain. Okay.
So 2018. Go ahead.
I think 2018. I don't think that they can hold these things together. So I think we will see a major market correction in 2018. And when that happens, that's going to cause the derivative implosion. I think the reset is probably, we have to feel a lot of pain, and I'm not sure how far the technology is in the blockchain to make the full transition. But I think we're going into hyperinflation, and I think we'll see that start in 2018 because I think we'll see these markets implode, and I think we'll see QE4 for sure. They're doing it. That's what that is. That's hyperinflation right there. That's QE. I don't care how they want to spin it, or that's their data. That's not my data. So
you think we have QE right now propping it up?
Oh, here's the proof. Plus.
Wait. What is that chart? What's the proof?
This is the mortgage-backed securities held by the Federal Reserve. So that's what they're buying to keep the mortgage
They're
market.
continuing to buy them.
Exactly.
They're not selling. They're not cleaning their balance sheet off. They're adding to it.
Exactly. In fact, from July, and they made that announcement, in September, and then it was supposed to start in October. Well, I pulled this in November. I just pulled this graph the other day. Does that look like they're even leveling off? Here's where it was leveling off for a while. So, yeah, definitely. We're still in QE. The central banks have added, 2-3 trillion this year? The Central Bank of China last month added, 47 billion into their markets? Have we stopped? No. We haven't stopped. The ECB is still, and now they're talking about getting rid of the deposit insurance scheme because that's what it is. No, they haven't stopped. They can't stop. They can't stop or the whole system implodes, and they're between a rock and a hard place. What's going to determine it is whether or not they can maintain enough confidence and therefore control, or if they lose that confidence. It's another reason why the markets have to keep going up, because they need people to stay in it. So yeah, I think we get an implosion.
And you're not talking about just an implosion in stocks. You're talking about implosion real estate. What you think will take a hit?
Yep.
You think real estate's going to get, particularly commercial real estate? D. Martina Booth, who was a former Fed insider, said she's worried about commercial real estate. The bond market, it's going to get hit.
Absolutely. There's buyers for the first run when they first print them. There's no buyers afterwards, and that's the foundation. Yep, bond market, stock market, real estate market, and therefore derivatives.
The whole thing's going to get creamed.
Yeah.
Whew, that's your 2018 prediction.
Yep. Now, I could be wrong, but I don't, I'm seeing a breakdown. Is the repatriation and the changes in the tax laws enough to postpone it? Maybe. That's certainly a possibility. It's not within my control. But you can see they're having trouble doing it. The markets are having trouble doing it on their own. And how much more money printing can the central banks do? The confidence is already declining pretty substantially. So I think we could see that in 2018. Maybe I'm wrong, but yeah, I think we could see it.
You don't think you'll see it here in 2017? We're all going to have a lovely Christmas, is that?
Exactly.
We're all going to have a lovely Christmas this year. Not going to break
because the markets are anticipating all the repatriation and the change in the tax laws, which will make corporate earnings look a whole lot better, even though that doesn't really change anything. So, no, I think we're going to have a very lovely Christmas. And by the way, I'm sorry, but I think they were saying on CNBC this morning that since 2010, December has been a good month in the stock market almost every single year since 2010. Gee, QE started in 2009. Shocker.
Lynette Zang, you are the top market analyst, the chief market analyst at ITM Trading. I appreciate you coming on and giving us your look-see at what's going on now and what you think is going on in 2018. Appreciate having you on, Lynette Zang at itmtrading.com. Thank you so much.
Oh, it's my pleasure, Greg. It is always a pleasure to be on with you.
Thank you, ma'am. Have a good day.
You too. Bye-bye.